welcome on into Lowcountry Money Talk. I'm Jessa Jeremiah here with expert, finally back in the house today. Phil Bloyd is here with Revolutionary Financial Group, and it is sure nice to see you.
It's glad to be here, Jessa.
There's a lot to talk about today, and boy, there's a lot of stock market news, a little bit of worry out there. We're really going to talk today about bear markets and finding out if we have time to recover. So a big topic on a lot of folks' minds.
Yeah, a lot going on this year.
So people are really wondering right now, Phil, if the stock market is still a good place to invest our money. What do you think?
Well, we have to have some of that type of return. What's our choices? So with inflation at 7%, we banks, CDs, maybe treasuries, all those, are way underperforming inflation.
Mm-hmm.
So we have to have a certain amount in the market, but also, we need to be careful how much we have based upon our age.
Right.
So that's a big thing. But if we look at the market overall, 100 years or so, 8 to 10% average rate of return on the Standard & Poor's 500 index. So, we just have to make sure that we have something set aside during the turmoil in the markets or the bear markets where we can take our income, until we can get things straightened out a bit, I guess.
Yeah, and that's, I think, what the big question is on people's minds right now is, for a lot of folks who have been enjoying the fruits of the bull market and are retired, now we're wondering, do we have time to recover, and how long does it typically take to recover from a stock market crash?
It depends on how far it goes down. I did a little math. This week some numbers are coming out. So the NASDAQ index officially went down 10%. So we consider that a correction. Okay, so that index is down 10%. I also heard some news that the Standard & Poor's 500 index, that over 20% of the companies that comprise that index are already in a bear market, meaning that they're 20% off their high. I would say, after this week's performance, it could be even more. So it makes us a little jittery, but it also is a great time for us to step back and see if we're too aggressive with the market based upon our age and some of these factors. So I think it's an important thing that we do have funds in the market, but we have the right amount as far as the percentage goes. Because, if we're talking about retirees, which that's most of the clients that I work with are retirees, we have to take a look and say, hey, if I'm 70 or 75 and I have this correction in the market and just bear territory means that we're 20% off our highs, but we can go down even lower than that. So, the one thing we were talking about, if the S&P index went down 50%, just to break even and get even, I have to get 100%.
Wow.
I mean, that could take years and years. So if I'm 75, I'm not contributing to retirement anymore. I've had these great 13 years of investing. I should have made a lot of money, sell high, get the percentages right. But there's a lot of factors other than just the market that are looking for our savings.
And let's unpack that just a little bit here in this first segment. In people who are already retired or about to go into retirement, what are some of those other factors they should consider before investing?
Well, the first thing they should consider is how do they feel this week? So when the market's just blowing up, the whole stomach test, am I losing sleep? Is it affecting my health, or am I obsessing on this? So, that could be tolerance. Maybe you can't tolerate that much in the market. The other thing we need to look at is time horizon. How long do these funds that we save, how long do they have to last? What type of return do I need on these funds? What about health concerns? Do I need money for that? Other areas, all these different things, spending habits, all these are things to consider. And the best thing I could say would be to get with an advisor, go in and have a plan written up, take a look at how long your money is going to last based upon usage and inflationary and other factors like that.
Yeah, there's never been a better time to have an expert on your side helping you out navigating the changes that we are seeing. So we've got a lot more to talk about, of course, as we unpack the rest of these questions and the show here on Lowcountry Money Talk, and we will be right